I believe the CBA and Westpac actually had another record-breaking day today.
It was a fantastic day for the banks, and if I can just bring up the market map, this is of the Australian share market. You can notice one big chunk of bright green on the screen, and they're the big four banks right here. As you mentioned, Nadine, both Commonwealth Bank as well as Westpac hitting all-time record highs, and it's really these yield players which are doing well on the market. It's not just the banking space, though. We are coming up to the end of April, and the theme that we've noticed throughout the month of April is that those defensive areas have been doing well. The telecom sector is up by 9.5%. And it's not just Telstra that's been doing well. We've also seen stocks like M2 Telecommunications as well as iiNet in that telecommunications space reaching 52-week highs today. We've seen some of the other regional banks like Bendigo and Adelaide also hitting a 52-week high. And in the healthcare space, we've seen primary healthcare reaching a 52-week high today. So it does look like that defensive, high-yielding theme really continuing on the market. And of course, it's a big week for the banks with both Westpac as well as ANZ coming out with half-year numbers. We're expecting to see some record numbers, and if we see a strong lift in the dividends, then we could see the banks continuing on this record run.
Ben, we touched upon, obviously goes to the whole heart of the global economic picture and questions being raised upon that, and that's obviously a big focus for the markets this week. We're hearing from a couple different central banks this week. What will you be listening for?
Absolutely, and I guess the argument that we hear time and time again is that China's still growing. It's still growing at 7.7%, but the fact is that the markets are forward-looking, and if they've priced in 8% and they're forced to reprice in 7.7% growth, well, stock prices aren't going to go higher to reprice that, they're going to go lower. And on Friday, we saw numbers out of the largest economy in the world, that was the US stock, the US economy, and GDP was expected to rise from 2.8% to 3%, and instead it fell back to 2.5%. So global growth concerns are still continuing, and yes, the US is still growing, and yes, China is still growing strongly, but the fact is, because stock prices are forward-looking and markets are forward-looking, they're repricing things downwards because we are getting an adjustment to global growth rates and concerns downwards, and that's having an impact not only on commodity prices but on stocks as well. Unfortunately, it's also the week where we do see a number of production reports coming through from that materials space, and so a lot of pain from the updates that we're hearing. Aquila Resources was down by 11% today. Sandfly also came out with its quarterly numbers. It was down by 4.7%. Oceana Gold down by 3.8%, and of course Kingsgate, the big one, a huge tumble with a fall of almost 16%.
The end of April, what a month it's been. We saw a rout in commodity prices just a couple of weeks ago. Was that just an indication, since we've seen the markets rise since then, that was a sort of short-term bump in the road and that we're not in any sort of major correction?
It's been a pretty amazing month. We're actually up 3% in the month of April and pretty close to the highs that we've seen for the year, which were at 5,163 points. So if we continue along this path, it does look like we'll be breaking new ground for the year. I guess the trends have been quite fascinating to watch, because once again it has been those defensive areas which have outperformed, with Telstra up, telecom up by 9.5%, property up by 7.5%, staples up by 7%. There is a little bit of nerves going into May, and that's because there's that old adage sell in May and go away. And I guess if we have a look at the last three Mays that we've seen, so in 2012, 2011, 2010, they actually have been quite negative ones. For the US stock market, down 6.3% last year, the year before down 1.4%, and then down by 8.2% in 2010. And indeed for the Australian market as well, down 7.3% last year, down 2.4% in the previous year, and in 2010 down by 7.9%. So altogether, April seemed quite painful, and that's really because of the commodity volatility that we've seen. But in actual fact, because of the rise that we've seen in the banks, in the telecom space and the defensive sector, it's actually been a pretty good month for the Aussie share market.